Now, Zurich Insurance reported full-year net income, which beat the highest analyst estimate. Switzerland's largest insurer increased its dividend, which was lower than analysts expected. This is the second increase under CEO Mario Greco, who joins us now for an exclusive interview. Mario, thank you so much for joining us this morning and giving us a bit of your time. Great to have you with us on the programme. So let's talk about the dividend first. Increasing your dividend for 2018 to 19 francs per share. Will you continue to increase the dividend?
We cannot say that. We're pleased to have been increasing the dividend for the second time. This year, we just followed our dividend policy, which is to distribute back to shareholders 75% of our net income. And this dividend is spot on the 75% policy.
Yes. Also, if we look at your full-year net, as I said in the introduction, that came in at a beat at $3.72 billion. What's the explanation for that number?
So 2018 was a tough year. We had catastrophes above the standard, above the averages. We had huge volatility in the markets, but nonetheless, we managed to perform and to deliver what we wanted to deliver by year end. When we presented our three-year plan in 2016, we hinted to investors that we will be delivering high returns to our shareholders through dividends because the profits will be growing through the years. And we're glad to see that we're respecting these promises.
Yes. Now, also, as part of the restructuring that you've overseen, Mario, Zurich has made a series of acquisitions in recent years, diversifying the business, rebalancing the weighting of corporate and retail clients. So let me ask you then what your next acquisition is.
We don't know that yet. We're busy trying to make the acquisitions we made as profitable as we wanted them to be. So far, they're all delivering. I mean, Covermore is our travel and services platform. We acquired this company a year and a half ago, and then we progress with other acquisitions in order to build it as a global franchise. And they're doing extremely well. We're very pleased with their results. Equally, in South America, we acquired businesses in Argentina, in Mexico, in Brazil. We're integrating them, and we're glad to see that they're performing as we hoped and as we wanted them to do. It's about discipline, it's about focus, it's about continuing doing the things that you promised to do and doing them every day.
Yes, you talk quite a bit about continuation, Mario. As you've pointed to there as well, Zurich's been looking outside Europe for growth. Is that strategy going to continue?
Yeah, I mean, we focus a lot on emerging markets. We see the world shifting towards emerging markets, especially Asia. We're mindful of that. Well, we see that it's not just a matter of GDP growth, but also a matter of innovation, dynamism, and the people there have, they're bringing ideas, they're bringing solutions which are extremely interesting for us. So that's why we focused last year. Our last acquisition was in Indonesia. We haven't yet concluded that. We're working to conclude it. But it shows the focus we have on emerging markets. It shows the focus we have on being bigger in Asia and being closer to where the changes are happening.
Yes. You also said just a couple of months ago that you're confident of hitting the $1.5 billion cost cut goal. Just give us an update on that in terms of how that's coming along and where the cost cuts are going to come from.
We set this target in 2016 of reducing our nominal expenses by $1.5 billion. This is a nominal target, quite simple to monitor and quite simple also to progress on that year by year if you plan for the right actions. This is exactly what has been happening. We came down on our nominal cost basis in 2018 by $400 million. So far, we have reduced our cost basis by $1.1 billion. This is exactly what we plan to do. So we have 400 million to go through 2019. We have plans for that, and we're quite confident that we will achieve it by year end.
Where is the next investment push?
I think the next investment push is on technology, innovation, and customer solutions. We need to continue bringing new solutions to customers. The world is changing. 5G will give a further acceleration to these changes. We're engaged on that, and we want to bring the best possible services to our customers as quickly as possible. In order to get there, we need to keep investing, and we need to keep developing our capabilities to serve the customers in a better way.